Welcome to the Fiscal Philosophy YouTube channel. I consider myself to be a value investor. Altria is, of course, one of the companies I have invested a good amount in, and it had a really rough year in 2023, like many of my other value investments, especially the dividend payers. Now, tobacco specifically was hit very hard, and there's a lot of good reasons behind that. There's increasing governmental interference and regulation in that industry. There's the decline of, the popularity of smoking cigarettes, especially, which is more pronounced in Western industrialized countries like the US, a lot of Europe, etc. And so Altria has definitely, taken some hits, but they did still manage to increase their dividend. They've stayed pretty close to their target payout ratio. And, hey, interest rates are higher, so, that's a factor too. But I'd like to look a little bit forward and think what the possible scenarios might be for Altria in 2024 and maybe beyond. The primary reason that people buy Altria Group, let's face it, is for those sweet, sweet dividends. You'll hear me say it on my live show, Cash Flow Kings, every Saturday night at 8 p.m. that cash flow is king, and I do believe that. And Altria pays out nearly 80% of the cash it generates, 80% of its adjusted earnings per share in dividends to its shareholders. And it grows that dividend at least once a year and does fall into the category of dividend aristocrats. Actually, technically speaking, it's a dividend king because of the length of its growth streak. It yields nearly 10% today, which is way above the market. Also, you may have heard I use a particular style of investing. I won't say what it is, but given that, it shouldn't surprise you that Altria has relatively stagnant revenue. This is because while certain segments of their business, like vaping, may have some serious room to run and growth potential, their core business, which is combustible tobacco products, is in a state of decline, like I mentioned in the introduction, in the West especially. This means that really, overall, it kind of balances out, and you won't really see too much growth or decline in any single year for the most part. Revenue is for show, but let's talk dough, meaning what they give back to shareholders. So we already talked a little bit about the dividend, which they increase every single year. This means every year you hold this stock, the stream of income that it pays to you goes up. Now, it may not go up a lot, but it still beats inflation for the most part. Now, they also return a lot of capital to shareholders through buybacks, which if they buy back the shares cheaply, this saves them money on paying the dividend on those shares, which leaves them more to distribute to the remaining shareholders. It's kind of a win-win. And I'm sure you must be assuming that with the share price being down this much, the business must be doing poorly, right? It can't be good. That's kind of the funny part, because the free cash flow has actually doubled over the last 10 years, even though it looks a little bit flat over the last few. I'd say that's a pretty impressive increase. And it's really just the multiple, which has fallen to less than half of what it was 10 years ago. So basically, the free cash flow has doubled, the multiple has fallen in more than half, which is resulting in the cheapest price per dollar of free cash flow that this company has seen in a long time. Actually, right now, it's the cheapest it's been since the low lows of the pandemic times. So potentially, this is a good value opportunity if you believe that the business isn't going to get substantially worse in the near future. The analysts seem somewhat split on where they think Altria is going to go in the next 12 months. Some see it remaining down in the $40-ish area, whereas the midpoint seems in the mid to upper 40s, with the really enthusiastic ones thinking it could hit as high as the mid to upper 50s, where it has been before during periods of low interest. Now, I'm personally of the opinion that as interest rates get dropped or the market starts to really anticipate those interest rate drops a little bit more, that Altria will probably move past the current levels and at least get back up into the mid to upper 40s. So I kind of agree with the average consensus here as to what it will do based on the information we have today. Of course, the value of Altria Group depends largely on what you think of the future of their brands. The Philip Morris USA brand is sort of the Rolls-Royce of combustible tobacco, so that may experience less decline than other combustible tobacco brands. However, it is still something that is in overall decline. However, they are putting a lot of their chips behind their Enjoy brand, which is, of course, a vaping platform. And vaping does seem to be on the rise, especially with younger consumers. While the increase in vaping, especially among younger consumers, may raise a lot of public health concerns, more than likely this is good for the bottom line of any company involved in the creation and sale of these products. I won't get into the moral side of things, but suffice it to say, it's addictive and people will always want some type of addictive vice in their lives. What your perspective is on Altria's value depends on how you see their future. In a future where you apply a standard 10% discount rate and very slow growth, and only value them based on their future cash flows, since they do return most of it to shareholders in the form of dividends and buybacks, you could come up with a fair value in the low to mid 50s with this scenario. So I'm not necessarily opposed to this valuation, although if you get a little bit stricter, either with a higher discount rate or factoring in the negative tangible book value, you do get the low 40s instead. As such, I can really see both sides of the valuation coin, with some people saying it's closer to today's price, with some saying it should be closer to the 50s. What I do think, though, is that their consistent yield and share repurchases will start to look a lot more attractive in a falling interest rate environment because of the consistency of that yield. Also, not to politicize the issue of smoking, but there is a potential menthol ban on the table that could come in the next year or two, and this would almost certainly adversely affect cigarette companies like Philip Morris USA, which is owned by Altria Group, as well as brands owned by their competitors, British American Tobacco, both of which are companies whose stocks I own. And I think this is a clear example of nanny state. If people enjoy and have a demand for this product, I think that should be up to them, just personally. One more sort of bearish thing potentially weighing on Altria's future, because again, it's how you presently value the future cash flow that the business will produce. They are leaning heavily into vaping through this Enjoy acquisition. There are knockoffs to compete with, which they are addressing through lawsuits, so give some credit where it's due. But also you have, the fact that they did try this once before with their Juul acquisition, which ended in a multi-billion-dollar failure and ultimately a write-off on their part. So is this going to be a case where they learned the lessons of failure the first time and have figured it out, or are they doomed to repeat? Ultimately, I think in 2024, the fact that Altria has an extremely compelling yield that's approaching 10%, and the fact that they've produced an increased dividend every year for decades is going to make them more appealing as safer alternatives start to sort of pay lesser and lesser yields as interest rates drop. As long as those interest rates do drop significantly, I think you will see money flowing into this and other dividend payers in 2024 and potentially beyond if the interest rate cuts go even further into 2025. But ultimately, in the long run, Altria is not without its risks and drawbacks. The future is not necessarily bright for tobacco in general, and I think that As an investor, you need to be willing to take a hard look at that reality when deciding if this stock is for you. I would like to sincerely thank you for making it to the end of the video. If you liked it, please remember to hit the thumbs up button, subscribe to the channel for more of my videos, hit the notification bell so you're always alerted. Follow me on X or Twitter, whatever you want to call it, at Mr. Macho Mog. Join on Discord, link in the description. Take it easy, everyone. Have a wonderful day.